Nigeria's current debt profile at over $100 billion, with 2026 debt service pegged at 15.52 trillion naira is unsustainable. That's according to Tilewa Adebajo, the CEO of the CFG Advisory. He notes that the 2026 budget needs to be urgently reviewed downwards for realistic implementation, and he further highlights that the government needs to articulate and implement deliberate disinflation and growth policies. He joins me now for more on the journey ahead and reactions to President Trump's speech at the World Economic Forum. Thank you so much for your time today, sir. Now let's start with that speech, and looking at the current state of geopolitics and more or less how that impacts growth projections that are being made for, especially for countries like Nigeria.
Well, I think on the whole, it's creating a lot of uncertainty in the global dynamics in terms of global trade. China, I think, has showed to be immune because it had a trade surplus this year of $1 trillion, a record high. And I think how other African countries are managing this, especially the European countries, is seen. We had a more measured speech by the Canadian Prime Minister, Mr. Carney. He gave a brilliant speech before Trump's speech. And I think Trump continues to be himself in terms of how he's been inconsistent. And the markets are responding accordingly. For the first time since 1986, most central banks are holding their reserves in gold now instead of U.S. Treasuries. There's disintermediation between U.S. Treasuries and gold. So most central banks are holding their reserves now. They're holding more of their reserves in gold than in U.S. Treasuries. That's the Trump effect. Gold prices have surged by about 80% year on year. And the forecast by Goldman Sachs is saying that there will be another $1,000 increase in gold prices this year. So the only thing I can say Trump is doing is that he's surging, is creating a market for gold, and I think everybody is resorting to safety with the record high in gold prices. So there's definitely a flight to safety.
All right, and let's get into your projections here. And I see that you're a bit more optimistic than other houses. I see the World Bank and IMF put out projections around 4.4%. Yours is about 5% for this year for Nigeria. What's that driving that optimism?
Well, what is driving that optimism primarily is the fact that if you take a look at our sectoral projections, mining, I think, is looking at about 26%. For the first time in a long time in Nigeria, a lot of the containers that are leaving the ports of Nigeria are leaving full. Containers used to leave empty here. So, and a bulk of what's going on are the rare earths minerals are being exported out of Nigeria. And Nigeria now is number 6 on the global list of rare earth minerals exports. And definitely now in the top 5. So a lot of that projections with the mining, I think, is beginning to drive because a lot of that activities are now beginning to register in the formal sector. And I think there's more regulation around that. And I think we're beginning to take notice of that and record that. So mining, financial services, trade will continue to drive the growth of the economy this year. But while we're positive about that, there's still some structural defects within the economy, especially with the debt problem, that raises a red flag.
Okay. Quite a lot there when you look at it, but I see that you're calling single-digit inflation. Okay, we get to see if do you think it would be more like Ghana, 5.4% already, looking better, and also your NPR 20%.
Yes. If you take a look at the government instruments that came out in January, the OMO auction was being priced about 21.4 to 21.45, and the bonds that came out this year are being priced in a range of about 18 to 22%. So if you take a look at the pricing of government debt instruments at the moment, you'd see that there's definitely an adjustment on the rates. And if at this time of the year we're seeing that those sort of rates, then it's clear that the real rate return premium we're seeing in the inflation and the current NPR at 27, that real return premium, I think the government is not really taking advantage of that because government is spending about 15 trillion in debt service this year. So they also want to price their instruments lower. So I think that really is going to force the NPR rates down. So I think by the end of the year, we should be looking at that NPR at about 20 official rates will definitely be, single digits, and our own rates probably at that time should be close to about 12.
Interesting times. I'll definitely be watching out to see how this play out. But now, third year of reforms for Nigeria, some positives, some green shoots, but still some key concerns around there. What are your biggest concerns?
Debt and fiscal sustainability, clear and present danger. We have a deficit of 23 trillion naira. I don't think that the financial markets can fund that. The debt auction is going at a run rate of ₦1 trillion a month, so they can only get 12 trillion from the markets, or maybe 15 trillion. There's still a deficit of about 10 trillion that needs to be funded. We're concerned that is the government going to resort to ways and means? And so the only way the government can do that is to sell down those JV assets as have been proposing.
What about the tax reforms? And you're not optimistic that we could see some funding coming from
I do not think that they're going to see any significant changes in terms of revenues coming through from that, because it's not very investor friendly. You're going to impact investments. Foreign direct investments is only $500 million last year. Corporations are still operating at the levels they were before. And with a 5% expansion in GDP, you can't really have that headroom for that amount of tax. Even at the World Bank projections of 4.4%. And if you're doing 12 or even 13% of GDP in terms of your revenues, you can add the numbers up. It cannot meet up with the 23 trillion deficit. So it's important the government needs to restructure fiscally. The fiscal side is really where the challenge is.
Finally, and as we wrap up the conversation real quickly, pre-election here, what are key concerns for you?
Well, I'm actually looking forward to the election because we're looking for the spending, which will probably boost some sort of consumer confidence and consumer spending. But again, uncertainty with elections in Africa, people will remain cautious. The foreign direct investment that we need, I think, is going to be on hold until the outcome of the election is known. And I think a lot of all these things are coming up on the 4-year cycle. So people are now going to begin to, this will be the last year of any significant activity while people cautiously wait to see the outcome of that election. So those election uncertainties, again, will impact investor confidence. But I think it's important we have a smooth elections and it's not drawn out, and so that we can have a better transition and get the gains of the reform.
All right, and thanks for sharing your insight there. We're looking at your crystal ball to see if all this will come to pass. So thank you so much for your time today. Tilewa Adebajo there, the CEO of the CFG Advisory.